Welcome to Worldwide Business. I'm Kathy Ireland. For any healthy small business, there will come a time when expansion is imminent, but your available credit and finances may hold you back. Joseph Ingracia, managing member of Capstone Business Funding, joins us to discuss how his unique company takes factoring, funding, and financing to a whole new level. Welcome, Joe.
Thank you, Kathy.
Joe, could you please describe your ideal customer?
My ideal customer is someone who has expertise in their field, whose company is growing, but lacks the working capital to pursue the growth.
And why should a company consider factoring their accounts receivable?
Well, most banks and finance companies lend against a company's balance sheet, which is, as you know, their historical performance.
Right.
What we focus on is their sales. And we focus on the credit of their customers, not their credit. So as a result of that, I could grant more credit to my clients who work for large multi-billion-dollar companies than I could if I looked at their balance sheet and lent to them directly.
Which makes sense. You're visionary, you're looking forward and seeing the potential. And I understand that many industries, including construction, can often get the cold shoulder when it comes to funding. So do you factor construction companies?
Yes, we factor all subcontractors in all trades. And typically, as I mentioned in the opening remarks, they're hamstrung because of their progress billing. Most finance companies and banks want to make sure that the work has been completed or that the product's been delivered and accepted. We want the same things, but we're willing and we have systems that allow us to confirm those acceptance and delivery on a monthly basis versus a one and done, as I mentioned earlier.
Joe, please describe what you mean by working in partnership with your customers.
Kathy, I don't want to mislead anyone. We're not angel investors or equity investors, but we do customize the funding that we provide our clients based on the needs that the management team tell us during our due diligence period. So from that perspective, that would be what we mean by partnership. However, unlike a bank, which has one way of lending, we have a variety of tools that we can avail our clients to.
Let's talk about the process. How does a company get started and how long does it take?
It's a very simple process. We collect some basic due diligence items like articles of incorporation or formation if it's a limited liability company. We want the accounts receivable aging report, the accounts payable aging report, whatever contract they're working on. We want to make sure they're properly insured. A copy of the principal's driver's license or passport. We then do what's called a lien search to make sure that they haven't pledged their assets to any other institution or there are no tax liens or judgments or suits. And if all of that works out, then we're able to fund the client.
You mentioned due diligence. How much do you require, and is there a max amount that you're able to fund?
The due diligence we have is very limited, other than knowing that the assets haven't been pledged to a third party. We're mostly focused on the credit of our client's customer. So our focus is on credit, not of our customer, but of their customer. As a result of that, we can extend them credit, and the process takes anywhere from 48 hours to 5 business days.
Well, Joe, there is power in partnership, and the success that Capstone and your customers have seen, it makes complete sense to me. I think your business will be a beacon of hope for so many, and I thank you for joining us today.
Thank you for having me.
Thank you. For Worldwide Business, I'm Kathy Ireland. Thank you for watching.